Mrs. Sheila keeps her books by single entry. She started business on 1st April 2015 with rupees 3 lakh. On 31st March, her position was as under. You see certain assets and liabilities like cash in hand asset, sundry creditors liability, cash at bank asset, bills payable liability, furniture asset, outstanding expenses liability. Then planned sundry debtor, stock, bills receivable, all these are assets. You have to ascertain the profit or loss made by Sheila during 2015-16. So how we can find the profit? See, what we can do is we have the information right from 1st April, that is the day where when she started the business with 3 lakh, and you also have the position as at the end of the year 31st March, that is 2016. So with this, what you can do is you can prepare a balance sheet, okay? And this balance sheet will help you to understand what is the capital position. So what we'll do, we'll prepare a small balance sheet. Let me show you the structure. I'm going to follow this horizontal format. Too, in practice, you cannot come across a horizontal format for corporates. Sole proprietors and partnerships, they still follow this horizontal format. So this is the format which I'm going to adopt: liabilities and assets. Okay, so we'll see one by one. Number one is cash in hand, that is 8,000. So I'll carry that in assets. Cash in hand, that is 8,000. Then let's go one by one. Let me just change this. Yeah. Then let's go back. We have sundry creditors. How much? 5,000. So we'll have it here. Liabilities, sundry creditors, and that is 5,000. Then go back. We have cash at bank 20,000. Asset. So we'll have here cash at bank. And what was the amount? It was 20,000. So 20,000. Then go back. Bills payable 10,000. It's a liability. Okay. So bills payable. And what's the amount? It is 10,000. Bills payable 10,000. Then we'll capture furniture. Furniture. So what is the amount of furniture? It is 40,000. Okay. So here we have 40,000. Then next item, outstanding expenses. It's a liability. So let's capture here liability, outstanding expenses. Let me correct this. Outstanding expenses. What was the amount? It was 8,000. Okay. Then go back. Plant and machinery. Plant, that is 2 lakhs. So we'll have that here. Plant and machinery. It is 2 lakhs. Okay. Then we have sundry debtors lakh and 50, stock lakh and 50, and bills receivable 15,000. So we'll have them. Sundry debtors lakh and 50,000. Then bills receivable. Let me check. Is it bills receivable? No, stock. It is stock. Stock of lakh and 50, and then bills receivable. Okay. And what was the amount of bills receivable? 15,000. So in this way, we have captured all the assets and liabilities. So now the difference between these assets and liabilities should be the capital position as on 31st March 2016. So what we'll do, we'll take the total. Okay, let's take the total here. Let me sum them. So my total is 5,83,000. So balance sheet, the total of assets should also be the total of the liability. If you total this, the total works out to, look at here, the sum is only 23,000. But what we want is 5,83,000. Okay, it means there is a difference, and that difference is nothing but your closing capital. So the total what we want here is 5,83,000. Okay, it means there is going to be a difference, and that difference is nothing but your closing capital. So let me write, we need total both sides. Okay, so there is going to be a difference because these three item becomes only 23,000. So we should know what is the difference. So difference we are going to call as closing capital. Okay, difference will be called as closing capital. That is nothing but 5,83,000 minus sum of these three items, sum of these three items. So that says the closing capital is 5,60,000. So let's check its correctness. I'm a little skeptical about its correctness. Let's go back to the question. Let's check whether we have taken things correctly. Look at here, the sundry creditors is 50,000, but what I have typed here is 5,000. Let me change that. It is going to be 50,000. So what happens now? Now I'm getting the closing capital, which is the balancing figure, as 5,15,000. So this is a balancing figure. Okay, we are looking for this, and why we need this information? We are basically interested in finding the profit, right? What was the capital introduced by Mrs. Sheila when she started the business? It was 3 lakh. Now what is the capital? 5 lakh 15,000. Why capital had gone up? Because the business had made the profit. So how do you find the profit? It is very simple. Compare the closing capital with opening capital. The difference is going to be the profit. So we'll have a small statement. We'll call it a statement of profit or loss of Mrs. Sheila for the year ending 31st March 2016. So we'll start with closing capital. Item A, closing capital, which we can pick up from the balance sheet. Okay, what was the figure? It was 5,15,000. Okay, now from this let us subtract less opening capital, and we know that was 3 lakhs. Okay, opening capital is 3 lakh. So this would tell us that your opening capital had moved to closing capital, that is from 3 lakh to 5 lakh 15. So the difference between A and B is nothing but profit made during the year. Profit made during the year is nothing but A minus B. Okay, and it is 5 lakh 15,000 minus 3 lakh. So you can say profit made by Sheila during the year is 2 lakh 15,000.
Thank you for watching this video. Hope you liked it. If you wish to learn more on this topic, do check our comprehensive online course. I have given the link in the description below. If you like this video lecture, do not forget to click on that like, share and subscribe button with bell icon.